After a long day at work, you sit down at your trading station, charts glowing softly in the dim light. Your body is tired. Your mind has been running on deadlines, meetings, and emails, yet the market pulses in front of you like a live wire. The temptation is immediate. You tell yourself, I'll just make up for lost time, catch the move before it disappears, I can push through. You are not alone. This is the reality for many traders balancing a 9 to 5 with the markets. It feels urgent, almost necessary, but that urgency hides a trap. Trading in this state is dangerous because your brain and body are not optimized for high-stakes decision-making. Hours of cognitive effort at work elevate cortisol levels, the stress hormone that affects the prefrontal cortex, the very region responsible for reasoning, impulse control, and risk assessment. As your cortisol rises, judgment diminishes. Your attention narrows, and emotional reactivity increases. Decisions that would feel clear in the morning become clouded by fatigue and stress. A small loss can trigger frustration, impatience, and a drive to overcompensate with impulsive trades. Decision fatigue compounds the problem. Every choice made during the day, from minor email responses to major work tasks, slowly depletes mental resources. By the time you approach the charts, your ability to think critically and adhere to your trading plan is compromised. Cognitive shortcuts begin to dominate. You start rationalizing trades that you would normally reject. Just this once, the market is different today, you tell yourself. These small compromises might feel harmless initially, but they accumulate, often leading to overtrading, risk mismanagement, and preventable drawdowns. Consider a typical evening session. You enter a trade impulsively after spotting a setup that aligns partially with your strategy. Initially, it feels like a smart move. Your mind searches for confirmation while ignoring warning signs. The trade quickly moves against you, and panic sets in. You adjust stops, double down, or chase the market to recover, behaviors rarely seen during a well-rested session. The result is usually a larger-than-planned loss, not a gain. Over time, these patterns erode capital and confidence, leaving traders frustrated, questioning their skill, and tempted to abandon rules they spent months perfecting. Even more insidious is the psychological toll. Trading while mentally and physically depleted links performance to stress management, not strategy execution. Small mistakes feel magnified, emotional swings intensify, and you may begin doubting your plan. Fatigue transforms minor setbacks into crises. You are not trading the market, you are trading your exhaustion. And the market always exploits the trader's state, never the trader's intention. Scientific research supports this reality. Studies in cognitive psychology demonstrate that high-stakes decision-making suffers when humans experience extended stress or cognitive load. Elevated cortisol impairs working memory and risk evaluation. Decision fatigue reduces patience, increases impulsivity, and heightens susceptibility to emotional biases. For traders managing part-time schedules, these physiological and cognitive effects are amplified because trading often occurs outside of peak energy periods. The consequences manifest in predictable patterns. Evening revenge trading, chasing missed profits, ignoring stop-loss discipline, or taking low-quality trades are all direct results of trading while fatigued. Every trader has experienced it. A trade that felt like a sure thing at 6 p.m., slipping against you by 10 p.m., leaving frustration and regret in its wake. This is the burnout trap in action, where ambition and exhaustion collide. Recognizing it is the first step to breaking the cycle. Before moving to solutions, it is important to understand that the trap is not a moral failing or lack of discipline. It is a physiological and cognitive reality. Human brains are designed to process information and make decisions within limits. When those limits are exceeded, performance drops, regardless of skill level. Part-time traders working long days must acknowledge that trading on autopilot or from a state of exhaustion is inherently risky. The path to consistent results begins with this recognition. The evening session should never be an extension of the workday. The first step in building a sustainable trading routine is identifying how your energy state influences decisions. Start by observing physical cues, tension in shoulders, shallow breathing, restless hands. Track mental signals, irritability, tunnel vision, or racing thoughts. These indicators are precursors to impulsive trading behavior. Awareness alone will not prevent mistakes, but it lays the foundation for structured interventions that will allow trading to occur from a place of focus and clarity. Trading after a full day of work requires more than just strategy, it requires a deep understanding of your own energy and focus cycles. Most 9 to 5 traders underestimate how significantly their daily rhythm affects their ability to make high-quality trading decisions. Cognitive performance is not constant throughout the day. The human brain operates on circadian cycles, and each person has windows where attention, reaction time, and judgment peak. For many traders, the early morning before work or mid-evening after rest periods provides sharper focus, while late afternoons and post-commute hours often coincide with mental fatigue. Recognizing these patterns is critical. Imagine finishing an intense meeting marathon, navigating rush hour traffic, and arriving home drained. Your body is tense, cortisol levels remain elevated, and dopamine from work-related successes or stress lingers. Attempting to trade under these conditions is like asking a runner to sprint at peak performance after running a 20-mile race. You might execute some moves correctly, but the fine-edged subtle pattern recognition, precise risk evaluation, patience to wait for ideal setups is dulled. Situational triggers also amplify these effects. A stressful commute, a demanding project deadline, or family obligations can all spike mental exhaustion. The brain interprets these stressors as urgent, diverting attention away from the deliberate, analytical mindset trading requires. Evening traders frequently find themselves racing to catch up with the market, entering trades impulsively, or skipping proper preparation steps. Emotional responses like frustration, guilt over missed opportunities, or impatience to make gains often dominate the decision-making process. Emotional triggers intertwine with situational factors. Stress from work is rarely confined to the office. It follows you home. A minor loss that might have been shrugged off during a well-rested session can feel devastating, prompting revenge trading or overcompensation. The mind seeks quick wins to offset emotional discomfort, which is why so many part-time traders experience fluctuating results and inconsistent adherence to rules. Recognizing the emotional state in which you approach the charts is as important as understanding the market itself. Practical tools help mitigate these challenges. Tracking your energy and focus throughout the day is one of the simplest yet most overlooked techniques. Maintain a journal that records not only trades and results, but also your mental state, energy level, and situational context. Include notes about commuting, workload intensity, and family responsibilities. Over several weeks, patterns emerge. You might discover that trades executed immediately after work yield lower quality decisions compared to trades after a short reset period. This self-awareness allows you to schedule trading sessions strategically rather than reactively, maximizing performance and minimizing burnout. Understanding energy also requires attention to micro-recovery periods. Short breaks, stretching, or brief mindfulness exercises can reset focus and reduce cortisol levels, creating a cognitive environment more conducive to disciplined trading. Even 5 to 10 minutes of deep breathing or a brief walk can restore clarity, helping prevent impulsive reactions that occur when stress dominates. For part-time traders, these rituals are not optional. They are essential to bridge the gap between the high-pressure environment of work and the analytical demands of the market. Cognitive science explains why these interventions work. The prefrontal cortex, responsible for rational thinking and self-control, is highly sensitive to stress and fatigue. Decision-making capacity is finite. By intentionally resetting your mental state, you restore executive function, increase working memory efficiency, and reduce emotional hijacking. Traders who neglect these interventions are effectively attempting high-level problem solving while the critical brain regions are compromised. The market does not forgive lapses caused by fatigue or cognitive overload. Journaling plays a dual role. Beyond tracking energy and situational triggers, it helps identify cognitive distortions. Thoughts like, I'll just make one more trade, I can focus now, I've had a break, or I deserve this win, often appear rational under stress, but are actually mental traps. Writing them down exposes the gap between intention and behavior, allowing you to develop counter strategies. Over time, journaling becomes a feedback loop, reinforcing self-awareness and helping you maintain focus in challenging circumstances. Another practical insight comes from aligning trading windows with energy peaks rather than rigid clock schedules. Many part-time traders attempt to trade immediately after work without considering energy depletion. A better approach is a short reset period followed by a concentrated 30 to 60-minute trading session when focus is highest. By prioritizing quality setups over quantity, you preserve mental resources and avoid decisions driven by fatigue or emotional impulses. Energy-based trading schedules enhance discipline, reduce errors, and increase the likelihood of following predefined rules. Family and home responsibilities also impact energy and focus. Evening traders must account for distractions, interruptions, and emotional obligations. Attempting to trade with constant alerts, background noise, or pending household tasks divides attention and increases the likelihood of impulsive decisions. Setting boundaries and communicating trading time to household members reduces situational stress, creating a mental space where analytical thinking can thrive. Ultimately, understanding energy and focus is about self-awareness, intentional planning, and practical reset routines. By tracking cognitive peaks, emotional triggers, and situational stressors, part-time traders can create a structured environment that supports disciplined, high-quality trading. Trading is not simply about spotting setups on the chart, it is about being mentally equipped to execute those setups consistently. The path to long-term success is built on recognizing your limits and designing systems that accommodate them. Trading after work is not just about watching charts, it is about intentionally shifting your mindset, resetting your body, and creating a structure that preserves energy while reinforcing discipline. Most part-time traders make the mistake of thinking they can pick up where they left off at the office. The truth is, trading requires a mental state that is separate from work, and building a sustainable routine is essential for consistent results. Reset rituals are the first line of defense against fatigue-driven mistakes. Even a brief pause between work and trading can dramatically improve decision-making. Step away from the screen, stretch, or go for a short walk. Mindfulness exercises, such as focusing on your breath or practicing a 2-minute meditation, help reduce cortisol and bring mental clarity. Journaling is another effective reset tool. Take 5 minutes to note the stresses of your workday, acknowledge them, and leave them behind. By externalizing distractions onto paper, you prevent emotional spillover from affecting your trading decisions. Structural rules create guardrails for trading under limited time and energy. Define a maximum number of trades per session and adhere strictly to this limit. Overtrading is rarely the result of strategy failure. It is the outcome of depleted focus and emotional reactivity. Setting stop-loss discipline and pre-trade checklists ensures that each trade aligns with your plan, rather than being a reaction to fatigue or frustration. These rules act as automated safeguards when mental energy is low, protecting your account and your confidence. Time management is another critical component. High-frequency trading sessions are not sustainable for a 9 to 5 trader. Instead, focus on quality setups within a defined trading window. A 30 to 60-minute session after a short reset period often yields better results than an open-ended attempt to catch up. Use alerts and notifications to prepare for high-probability trades without constantly monitoring charts. Prioritizing setups that meet all criteria reinforces discipline and prevents the emotional impulsivity that comes from trading under time pressure. Practical routines help transition from work mode to trader mode. Start with a simple 30-minute routine. Step away from work-related tasks, hydrate, perform a brief physical activity, and engage in a short mental reset. Review your trading plan and prepare the charts with relevant indicators. During this routine, focus entirely on trading, leaving work and personal obligations aside. Consistently applying this routine builds a mental association between preparation and focused trading, allowing your brain to shift efficiently into the analytical mindset required for consistent execution. Consistency in these routines compounds over time. Each session where preparation, focus, and rules are applied strengthens neural pathways associated with disciplined trading. The process becomes automated, reducing reliance on willpower, which is finite and easily depleted after a long workday. This automation is what separates reactive traders from strategic traders. Even on days when fatigue is present, following a structured routine preserves cognitive function and minimizes errors. Environmental factors also play a role. Trading in a cluttered or noisy space increases cognitive load and amplifies emotional reactivity. Create a dedicated workspace with minimal distractions, proper lighting, and ergonomics that support long-term focus. Organizing the environment is part of the system. It signals to your brain that this is a controlled, intentional activity, distinct from the chaos of the workday. Another layer is emotional preparation. A brief self-check before entering trades assessing patience, emotional state, and confidence in the plan can prevent impulsive decisions. Recognize emotional triggers from the workday that might bias judgment, such as frustration from missed deadlines or stress from workplace interactions. Acknowledging these states allows you to consciously choose whether to engage in trading or delay until mental clarity returns. Practical systems should also include documentation and post-session reflection. After each trading window, record not just results but also adherence to rules, quality of focus, and any emotional influences on decisions. This reflective practice illuminates patterns over time, highlighting both successes and areas where fatigue or emotional carryover compromised execution. By reviewing these insights, you fine-tune routines, trading windows, and reset rituals, creating a dynamic system that adapts to the realities of balancing a 9 to 5 job and part-time trading. Quality over quantity must remain the guiding principle. Trading more frequently does not increase profitability, it amplifies the risk of mistakes. By selecting high-probability setups, aligning sessions with energy peaks, and adhering to rules, part-time traders maximize the impact of each trade while protecting their mental and financial capital. Over time, these practices build confidence, reduce stress, and reinforce the discipline necessary for scaling trading as a career. Sustainable trading sessions are not about forcing activity or trying to match the hours of full-time traders. They are about designing an environment routine, and mindset that allows high-quality decision-making within the constraints of a 9 to 5 schedule. By integrating reset rituals, structural rules, time management, and reflective practices, traders can consistently execute their plan, protect their capital, and gradually move toward full-time trading without burning out. Consistency in trading is built on more than strategy. It is built on lifestyle, energy management, and structured routines. Long-term burnout prevention requires integrating physical, mental, and procedural habits that support sustained performance. Part-time traders who attempt to ignore these factors inevitably drift toward fatigue-driven mistakes, emotional trading, and stalled progress. The goal is to create an ecosystem where trading aligns with your energy and capacity, rather than competing against the demands of a 9 to 5 job. Sleep is the cornerstone of cognitive function. Trading under sleep deprivation magnifies decision fatigue and emotional reactivity. Even one night of inadequate rest can impair judgment, distort risk perception, and increase impulsivity. Prioritize consistent sleep schedules, aiming for at least 7 to 8 hours per night, and avoid sacrificing rest to chase trades or review charts after work. When energy levels are replenished, your brain processes information more efficiently, patterns are easier to recognize, and adherence to rules becomes automatic. Nutrition and hydration are equally critical. Consuming meals that stabilize blood sugar prevents crashes that amplify irritability and reduce focus. Avoid excessive caffeine or sugar as a compensatory mechanism for fatigue, as these create energy spikes followed by steep drops, impairing both emotional regulation and analytical capacity. Drinking water regularly and fueling your body with balanced meals directly supports alertness, attention, and resilience during high-stakes trading decisions. Exercise, even in short daily sessions, acts as a reset for the body and mind. Physical activity releases endorphins, reduces stress hormones, and improves mental clarity. A simple 15 to 20-minute routine before trading can clear residual tension from the workday and prime the brain for focused decision-making. The compounding effect over weeks enhances both discipline and patience, which are essential traits for traders managing part-time schedules. Workspace setup contributes to consistency and mental resilience. A dedicated trading area minimizes distractions and creates an environmental cue that signals the brain to switch into trading mode. Ergonomics, lighting, and organization reduce cognitive load and allow full focus on market analysis. Avoid trading from chaotic environments where external stimuli can hijack attention and increase the risk of impulsive decisions. A professional workspace is part of the system, not an optional luxury. Accountability mechanisms provide an external layer of discipline. Maintaining a trading journal, reviewing sessions with a mentor, or sharing performance with a trusted peer creates feedback loops that reinforce adherence to rules. This external oversight reduces self-deception and helps identify patterns that internal observation alone may miss. For example, a mentor may notice tendencies to overtrade after stressful workdays, enabling preemptive adjustments before capital is at risk. Mental resilience is cultivated through reflective practices. Cognitive behavioral exercises, mindfulness meditation, and journaling allow traders to recognize emotional triggers and interrupt impulsive responses. Reflective practice strengthens awareness of fatigue, frustration, and impatience, which are amplified when balancing work and trading. Over time, emotional regulation becomes a default state, reducing the influence of workday stressors on trading decisions. Structured trading schedules based on energy, rather than fixed hours, are essential for preventing burnout. Instead of forcing trades after a long day, identify periods of peak cognitive function and align trading activity accordingly. For many 9 to 5 traders, early morning or brief post-work sessions following a reset period provide higher quality decision-making windows. Protecting these energy-based sessions ensures that trades are executed under optimal conditions, rather than under fatigue-induced urgency. Long-term consistency also requires realistic expectations. Avoid evaluating performance solely based on individual trades or short-term results. Focus on process-oriented metrics, such as adherence to pre-trade checklists, stop-loss discipline, and selective execution of high-probability setups. By measuring discipline rather than outcomes, traders reduce emotional pressure, mitigate revenge trading, and foster sustainable growth over time. Another important factor is integrating deliberate downtime. Cognitive recovery is essential to prevent chronic fatigue, which undermines decision-making, risk assessment, and emotional regulation. Schedule days or periods where trading is intentionally avoided, allowing the brain to reset fully. This practice not only protects performance, but also reinforces patience and strategic thinking, which are often compromised when trading out of compulsion. Over the long term, these behavioral and procedural adjustments compound into a resilient trading framework. Sleep, nutrition, exercise, workspace optimization, accountability, emotional resilience, energy-based sessions, and downtime collectively create an environment where part-time traders can execute plans consistently. The cumulative effect is a dramatic reduction in mistakes, overtrading, and stress while enhancing focus, patience, and confidence. Mastering the balance between work, life, and trading is the single most impactful step a 9 to 5 trader can take. By structuring your trading sessions around energy, implementing reset rituals, enforcing strict rules, and integrating health and accountability systems, you protect both your mental and financial capital. Trading in alignment with your energy, rather than chasing trades or profits under fatigue, separates disciplined part-time traders from the majority who fail to sustain consistent results. Commit to these principles, refine your routines, and watch as your trading performance stabilizes, confidence grows, and the path toward full-time trading becomes achievable.